Hello, traders. Gary Wagner here. It is 12:35 in Honolulu, 6:35 in New York on Thursday, 13th day of April, 2023, and this is the Daily Report for Gold and Silver. As you know, we went long the other day at 2016. We now have gold trading at $2,054, so we have nice profits. And today's show is going to be different than our typical show in that we are going to take an extremely long-term view of gold in terms of our belief that we have been in a super cycle. We first documented our findings in technical analysis of stocks and commodities in 2016. There is a link to the reprint of that article that you can get if you want to read that. Obviously, we are going to maintain our current long position. We will send out a trade alert raising our stop shortly, but on today's show, I want you to take a look at the big picture. I hope you enjoy it. An exceedingly strong day for the precious metals, with gold and silver having strong gains. We are currently trading in Australia, so the net change does not reflect the net change of the day, which is well over $30, with June gold currently fixed at $2,054.40. Contributing to the dynamic gains in both gold and silver was dollar weakness, although that was a small component. The dollar is currently down 0.47% and quickly approaching 100, with the index at 100.695. Lastly, silver is in very, very close reach of $26 an ounce, with the current May contract at $25.96. This will be part one of a two-part series on our concept that gold has been in a defined super cycle. We first talked about it in 2016 and wrote about it in Technical Analysis of Stocks and Commodities. The idea that commodities, stocks, the financial markets trade in a rather large super cycle is not a new concept. Originally, it was speculated in 1913 and 1924 by two Dutch economists. Then a Russian economist labeled that same type of multi-decade rally in 1925. And then in 1950, R.N. Elliott speculated the same concept, labeling them as supercycles, from Grand Supercycle to Supercycle. What brought us to the realization that gold was trading in such a cycle really occurred when we were at the end of a multi-year correction. We began our service in 2009, but from 2000 up till 2011, gold moved from $200 to above $1,900. Then when it came down, it was an interesting mix because we had been looking at gold trading substantially higher for so many years. When we looked backwards at the multi-year correction, an exceedingly long cycle or timeline that it took for gold to move 800%, we realized there was a extremely big picture. And that's when we first documented our first findings in 2016. What we are looking at is a monthly chart. We have a basic Elliott wave extension. The extension is of wave 3 from $200 to $1,900. We then begin at approximately $1,050, and then we ascertain where in fact that could go by looking at different extensions. We will explain this in detail on tomorrow's show, but to give you a preview, and this is a multi-year look at the markets. We're not looking at this to occur overnight and even over the next couple of years, which means that the prices we believe gold could hit are years away, considering that it took roughly 11 years for this leg of the supercycle from 200 to 1900, and gold currently has been in a rally mode since 2016, which is to say that the prices we are projecting will not actualize for many years. The lowest end is a 1-to-1 relationship between wave 3 and wave 5. The reason we find that plausible is that gold tends to have extended fifth waves. The first target is $2,700, and the major target is well above $3,000. On tomorrow's show, we will talk about part 2, in which we dissect this in much greater detail. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.